Hello, and welcome to Technology and Transfer Pricing, a new essential. During this webinar, we'll be discussing how technology can help with transfer pricing compliance, navigating the muddy waters of a post-BEPS world, as well as tax reform. During this session, we'll be discussing the following. Obviously, we'll want to go ahead and discuss the context in which taxpayers and tax managers will be responding to and having to prepare transfer pricing compliance reports for. So that requires us to have a discussion of the post-BEPS world. Also, we'll be discussing the impact of U.S. tax reform and its effect on transfer pricing compliance. From there, we'll be discussing a shift towards technology and how specifically software applications can help with the preparation of various different transfer pricing compliance reports. And then we'll also discuss a few examples. And lastly, we'll go ahead and provide a summary of our thoughts and comments during this session. So before we go ahead and discuss the details, let me just start off with some introductions. My name is Gene Basley. I'm a Senior Manager of Transfer Pricing here at OneSource Transfer Pricing. I have over 10 years of experience within the area of transfer pricing, helping multinational companies with various different transfer pricing needs, including compliance, documentation preparation, as well as planning. I'm joined by my colleague, Alex Ward, who's also a member of our transfer pricing professional services team as well. In order to understand how technology can help with the preparation of transfer pricing compliance reports, it's important to understand specifically what taxpayers have to respond to in terms of the environment of which they're preparing these reports in. For the past 3 years, Thomson Reuters has published its BEPS Global Survey, which is a survey meant to undertake and ascertain some details as it relates to taxpayers' understanding of various BEPS global requirements, including Action Plan 13, which specifically discusses transfer pricing compliance documentation, as well as the other various BEPS action items. As you can see on the right-hand side of the screen, you see some actual responses that were obtained from that survey. In general, what you can see here is that many of the respondents were a bit ambiguous as it relates to their understanding of the various different requirements, specifically to Action Plan 13, as well as some of the other requirements. In addition to not understanding what was required of them, they also expressed the fact that they have very limited resources in order to be able to tackle all of these new requirements and these new provisions that are being brought forth to them. Now, on the right-hand side of the screen, you can see that there's a graphic which clearly shows specifically the lack of resources that many taxpayers and their departments had in response to being able to tackle these new requirements that are a result of BEPS. As you can see, close to 45% of respondents mentioned that their companies have no plan to have additional resources in order to be able to absorb and understand and ultimately address these new global requirements that are a result of BEPS.
Well, thank you very much, Gene. And as most of us are aware, one of the biggest items, as we have just previously discussed, is action item number 13. This has added a lot of filing requirements that tax departments and companies previously have not had to deal with. And as you can see in the graphic, we have a list of these new filing requirements. But the ones that I want to focus on is the CBCR, the country-by-country reporting, as well as the master file. Let's just take the country-by-country reporting document alone. The country-by-country reporting document alone is requiring companies now to have to create new processes. And also, the filing is very complex because not only do you have to file within your home nation, but different foreign nations all can have a different template. They also can have different deadlines, as well as different XML requirements. In addition, you have to notify each of these foreign countries where you have filing obligations how they're going to receive their country-by-country report. So this has added to the landscape of transfer pricing documentation immensely, and this is something that every tax department and every company as a whole that has reached this threshold is dealing with.
And as my colleague just mentioned there, the introduction of Action Plan 13 and its impact obviously has brought on this new reporting requirement where the preparation of a country-by-country report is required for many different multinational companies. But in addition to that, not only did Action Plan 13 focus on the preparation of a CBC report, but it also called for the preparation of two other additional documents, specifically the preparation of a master file, which is a document which specifically discusses a multinational organization's overall transfer pricing environment, its mechanisms for in relation to its transfer pricing policies, a discussion of its intangibles, a discussion of a variety of different items, which sort of sets the stage and discusses the overall environment for the company as a whole. Lastly, it also includes the preparation of a local file, which is a document which focuses on more granular transactions that affect individual entities within the multinational organization, which focuses primarily on certain transactions that that company happens to be dealing with or transacting with other related parties with. Now, just wanted to sort of capture some of the nuances as it relates to the preparation of a local file and what the OECD has recommended. Now, prior to Action Plan 13, the OECD did provide guidance as to the information that would be contained within an actual transfer pricing documentation study. And the information that's now recommended by the OECD hasn't changed too substantially from what it was historically. But what I do want to note is the fact that the preparation of a local file, although it does have some template information as obtained from the OECD guidelines, it's important to note that specific jurisdictions will have the ability to add their individual nuances and requirements for their specific local files. So as you can see on the screen, although you can see that there are some similarities, but one stark difference is the fact that when taxpayers are having to prepare these local files for the individual jurisdictions of which they have operations in, it's important that whatever documentation that you prepare, it must meet the specific requirements of those particular jurisdictions.
Okay, so for preparing and filing your documentation, there's a lot of questions that tax departments have to ask themselves in terms of how they're going to go about doing this. Which individuals are going to be involved? Are you working with advisors? How will the new Action 13 filing requirements affect your existing processes? We got to hear from a lot of different tax directors, and they discussed the disruption that they experienced just trying to conform to the CBC requirements. Some tax directors and their departments, it took 5, 6, 7 months to put this together, because you literally have to create a new process for some of these new filing requirements. In addition, this is in addition to as well with the local transfer pricing filing requirements that you have as well. And it's very important that when you are completing these documents, that you tell a consistent story. So you need to have your country-by-country report, your master file, and then your local documentation should all add up to tell a consistent story. I'm not sure how many tax departments faced this last year, but we know that with a lot of our clients, when we were fulfilling the CBCR reports last year, there was 2 nations, France and Spain, that it wasn't until the last 3 days that the 8975 form was due that they finally signed the unilateral agreement with the IRS. This led a lot of clients to have to re-examine and see, well, I filed with the IRS, but now do I have to also do a local filing? You can expect and anticipate a lot more of these type of situations going forward. And so really reviewing your process to be able to see how can you handle these type of situations is very important.
Right, so I mean, as we've discussed for the past few minutes, we can definitely see the impact that BEPS and the recommendations and now the legislation that's in place, how it has an impact on taxpayers and their overall compliance function as it relates to transfer pricing, the preparation of a CBC report, the preparation of your master file report, as well as your local files for your entities that have transactions within specific countries. In addition to BEPS, The passing of tax reform in December of 2017 also has an impact on how taxpayers will need to be able to handle their transfer pricing compliance function. As you can see, the introduction of tax reform has introduced several different provisions which has an impact on how taxpayers will ultimately have to prepare and plan for their transfer pricing. So for instance, with the introduction of base erosion and anti-abuse tax, or BEAT for short, this particular tax will require a lot of companies, or at least a lot of companies, to examine whether or not they meet the certain stipulations and parameters for payment of this particular tax. Especially for much larger organizations that have revenues in excess of 500 million USD, it'll be real important for them to examine exactly whether or not they meet those specific provisions, or else they'll be hit with this particular tax. Likewise as well for the Global Intangible Low Tax Income, or GILTI, and lastly for FDII. These three provisions, which fall under the Tax Reform Act signed back in December of 2017, in addition to the recommendations that come as part of the BEPS action items, are all areas of which taxpayers will now have to examine and be, quite frankly, they'll need to understand exactly what they need to do going forward in order to ensure that they're compliant, and that they have this specific documentation in place that can readily address all these different requirements and provisions that are now on the table.
Yeah, so let's discuss the risk assessment process. So we can tell by the adoption of Action 13 by many tax authorities throughout the world that we can anticipate there's going to be quite the increase in transfer pricing audits. As we know, a lot of nations throughout the world, their national debts are constantly increasing, and transfer pricing audits are one of the places that they believe they can capture additional revenue. So you have to imagine that these tax authorities, once they receive these country-by-country reports, they're going to be using their own technology to scan through them and to look for any areas that they deem to be suspicious, where they think there might be some base erosion activity happening. So in consideration of that, we believe that it's very important that taxpayers also identify, when they are reviewing their country-by-country report, items that could be deemed risky by various foreign tax authorities. Technology can be very useful for this. The OECD has provided 19 different items of risk assessments that they're going to be looking at. And you know that this is just the minimum that they'll be looking at. So technology can help you not only keep track of which jurisdictions and which line items are more risky, but it can also help you then plan as to what proactive actions are we going to do in order to mitigate our risks going forward.
Absolutely. And we've discussed several things here thus far, right? We've discussed the environment of which tax compliance related to transfer pricing is occurring, right? We've talked about a post-BEPS world. We talked about the impact that tax reform now has in relation to transfer pricing. And ultimately the goal here is for us to sort of discuss how technology can help with adapting to and responding to this changing environment. But before we actually get to technology and how software solutions specifically can help in addressing these specific matters, it's important to understand how historically most taxpayers have handled their transfer pricing compliance function. Now, as you can see on the graphic on the screen, there are typically three options, right? At least three most widely used options as it relates to handling your preparation of your TP compliance reports. Now, the first option is historically perhaps perhaps one of the most utilized options, and that's outsourcing the function to a tax and accounting firm. So potentially, this typically occurs where the in-house tax team of a company doesn't have sufficient resources, doesn't have sufficient expertise to navigate the changing landscape and the different rules and requirements, and as such requires the assistance of an external advisor to help them prepare their transfer pricing studies, as well as perhaps their preparation of their CBC report and other documents that are required. Now, option number two, which is the option in which the process is actually handled in-house, is typically the option for which where the taxpayer either has a sufficient number of headcount within their team to be able to handle the various different reports that need to be prepared, and in most cases they might also have the expertise needed to be able to navigate the different rules and requirements and understanding of the methodologies and so forth. Now, the third option, which is called the co-sourcing option. Now, in this option, there are a variety of ways of which this option works. Now, when it comes to working directly with a services team, or in this case, an external services team, in this case, a combination of both the in-house team as well as the external services team take on the process of handling the documentation together. So in some cases, the in-house team might handle the more routine or less complex transactions, and they'll handle that process in-house, utilizing their own resources. And what they'll do is they'll outsource perhaps some of the more complex transactions out to the external services team. Another way in which the co-sourcing option can take place is where the use of technology or a software application is being utilized directly by the in-house team. And I just want to explain this particular scenario as to how that works. So in some cases, when software is brought into the mix, what will happen is the in-house team has the long-term goal of wanting to bring in the process of handling their documentation and other TP compliance reports in-house. But currently, within the short term, they don't have the necessary resources, they don't have the bandwidth, and perhaps they don't have the expertise at this very moment. So as such, they'll work with a different firm who happens to either have access to this software application or happens to sell it as one of their particular products. So the taxpayer will work with a software provider, of which the software provider, coupled with members of their services team, will include all the qualitative and quantitative information as it relates to that taxpayer's various different transfer pricing related issues into that software platform. And they'll essentially prepare their documentation directly within the platform. Now, this relationship in most cases typically occurs for either 1 to 2 years, or until the taxpayer is comfortable enough, or at least they have the resources in place to be able to now take whatever information that is contained within that software platform and now proceed to actually handle the in-house TP function. So in a nutshell, where essentially they ultimately end up achieving their goal of being able to handle their TP documentation in-house, but in this case, as opposed to relying upon external advisors, they now have made use of a software platform coupled with the help of a services team during the early onset of the engagement, and now going forward, they're now handling that process in terms of the preparation of their documentation. One last thing, though, I want to make it clear is that in most cases, the usage of software in-house is quite useful for companies that have a variety of different local file reports and other types of compliance documents that need to be prepared, but also in cases where they have a lot of routine functions but that are occurring in many different countries. So the ability and the scalability associated with being able to utilize the information that's already contained within the software to address transactions that are quite similar in different regions is one of those key value points that a lot of taxpayers find when they ultimately transition to the point of utilizing a software platform.
Yeah, so kind of to elaborate on the different options that Gene has just described, we at Thomson Reuters, we have witnessed within the marketplace a shift towards technology, a shift towards technology for tax departments to help improve their internal processes and also help streamline their processes. And we're just going to run through a scenario here of 2 different companies with 2 different approaches. So as you can see on the slide here, we have Company A. Company A does not use technology, and Company B does use technology. Yeah, so we're just going to take a closer look at these 2 different approaches and just to kind of see the benefits of using technology with company B that is using that, and company A more sort of the lack of technology and how this affects their internal process. So company A, which does not use technology, in preparing and filing their documentation, this means that they now heavily rely on their advisors. They're relying on their advisors as to where do they need to file, what are the requirements of those filings, as well as what data do they need to collect. And then internally, they are generally using an Excel-based format that is spread out throughout the organization to help collect data from different stakeholders all around their international footprints. This documentation leads to more of a decentralized process. In addition to that, it also leads to company A having to rely not only on their advisors for keeping track of all the requirements for their country-by-country reporting, their CBC notification, their master file thresholds, and the local transfer pricing reporting requirements that they now have to meet. It also requires them to have to outsource a lot of the documentation process to their advisors. The disadvantages of this approach is that it can lead to being very cost-heavy, as well as also decentralizing your documentation process can lead to higher risk of errors and also a much higher dependency on their advisors.
Now, on the contrary, company B embraces the use of technology in the preparation of its various different transfer pricing compliance reports. Now, as you can see on the screen, one of the things that any taxpayer should look into when they make use of a transfer pricing software platform or any form of technology related to the preparation of their TP compliance documents is that whatever tool they use, it should be able to capture the most up-to-date information. So for example, if you're utilizing a tool that can be utilized or that is being utilized for preparation of your transfer pricing documentation reports, the expectation is that it would have the most up-to-date information in terms of the databases that are being utilized for, per se, your benchmarking studies and so forth, or even making sure that it has the most up-to-date information as it relates to templates or expectations as it relates to what various different jurisdictions might require to be included within the actual local files. So these are all things that, or at least these are some of the characteristics that one would come to expect from the use of a particular software platform as it relates to some of your more standard documentation studies. Another key characteristic as to why taxpayers would move towards the adoption of technology as it relates to handling their TP compliance function is the scalability associated with utilizing a technology-based platform. In most cases, most of these software platforms are web-based, which facilitates the sharing of information a lot easier as opposed to having to store information on a shared drive where lack of audit tracing features are available, and any one user might be able to access the file and make changes without the knowledge of others. The software platform allows users now to be able to readily handle a variety of qualitative and quantitative information, share it effectively, and also make sure that there are proper audit triggers in place to ensure that information that shouldn't be changed is not, and information that should be changed is ultimately is. So that's one of the other characteristics for usage of a software platform as it relates to the TP compliance function. The usage of a software platform allows for centralization of the overall TP compliance preparation and filing process, as opposed to scenario A or company A, where they were relying upon external advisors to inform them of what their requirements are in certain jurisdictions and where they needed to file, when they needed to file. In most cases, when you centralize the process, the tool itself, the software tool, is meant to be able to provide you with the information that you need in order to know when, where, and what you're supposed to file in those particular jurisdictions of which you have activity in. And centralization is one of those ways of being able to ensure that you have a good grasp of all that, because now all that information resides within one area, and assuming that that platform, the software platform, can provide you with that information, you now have one central repository where all this information can now be obtained, and that way there are no requirements where you have to work with an external advisor and wait for him or her to get back to you with their research. All this information now resides centrally, and you're able to effectively handle the requirements as it relates to all of your TP compliance requirements, whether it be your filing of your notifications, whether or not you need to have a local file in a particular country, or if you don't need it, and whether or not you meet the master file threshold, and whether or not you're supposed to prepare it and submit it for a particular country. Lastly, what I also wanted to discuss are some of the advantages, some of the key advantages which drives a lot of companies to adopt software. Now, one of the perhaps the most important area is the fact that it definitely lowers costs, in the sense that no longer do you have to rely upon advisors or external advisors who at times can be quite expensive, especially if you have a rather complex organization where there's a lot of transactions that are going on. In most cases, those fees can be upwards within the six figures, if not even more. Whereas in the usage of software, although in the short term the cost itself might be somewhat expensive or relative to what you might be paying during your first year of an initial engagement, as you continue to handle your more routine transactions year in and year out, you ultimately benefit from some long-term cost savings, with the fact that now you no longer have to rely upon external advisors who year in and year out happen to increase their fees. You're now actually taking advantage of the fact that, hey, we're handling routine transactions. These transactions, facts and circumstances have not changed, and as such, we are able to just roll forward the preparation of our benchmarking analyses or updating our narratives and our functional analyses with information that is relative for the year in question, and as such, we're no longer have to spend hundreds, if not thousands of dollars having to do our TP studies.
Okay, so thank you, Gene. And to elaborate on what Gene just mentioned regarding Company B and also analyzing Company A, a lot of tax departments are now embracing the idea of adopting technology into their transfer pricing process. Do we believe transfer pricing is at the state where, with technology, where it can be fully automated? Absolutely not. But we believe that if you properly leverage technology, this can allow your internal process to be more streamlined, also free up your headcount for other activities within your department, as well as also free up your budget so that you can better utilize your advisors. You can work on more complicated issues, such as the transfer of IP, or also tax planning and changing your tax structure. Because as we can imagine, in response to the country-by-country reports and a lot of the other initiatives from the BEPS action items, there will be a lot of reorganizing of intercompany policies. And so the adoption of technology that we see a lot of companies embracing these days is allowing them to bring in some of the more routine documentation needs in-house, letting them complete them in-house, and leveraging their additional capital and their headcount to take care of much more complicated matters. And this benefits the tax department and the company as a whole greatly. Gene, do you have anything to add about that?
Yeah, I mean, just to sort of piggyback off of what you've mentioned there, the use of technology definitely can help to increase certain efficiency as it relates to how companies handle their TP compliance function, right? As you mentioned, handling some of the more routine transactions, things that are pretty nuts and bolts in terms of the complexity, but having to, and not necessarily kicking out the external firms, but only relying upon them in those areas where they have a little bit more expertise on handling more complex transactions or more complex issues. But aside from handling just your compliance function, the use of software and technology as a whole is quite beneficial for planning purposes as well. Although we've discussed how there are various software solutions are being adopted by taxpayers to handle the TP function, a lot of taxpayers are also making use of software to do some modeling and some planning as it relates to their transfer pricing. As we've discussed earlier, right? the landscape is changing, right? There are new rules and regulations, different changes in different jurisdictions and so forth. So companies will need to be flexible in terms of how they go ahead and establish their policies. They'll need to be flexible in knowing how they respond and react to, changing legislation. Now, software as such is one of those ways, or at least one of those tools that can be used to help, add to the arsenal of ways that, taxpayers can respond. So, for example, right, as you can see on the graphic above, one of those areas I like to focus upon is scenario modeling, right? We're looking at, for example, if a company is looking to add a particular entity within a particular region and is looking to establish a intercompany policy, right? And would like to know, well, what's an appropriate markup that I should charge, right? I don't have an existing benchmarking set to rely upon. With the use of software, you can go ahead and actually obtain the information directly within the database contained within that platform and get an idea as to what are some potentially arm's length markups that can be potentially charged and then ultimately be included within that policy that you're ultimately going to prepare. And likewise, there are a variety of different ways of which software can be utilized for planning purposes as well. So in summary, we've seen how technology can be utilized to handle the transfer pricing compliance function in a variety of different ways. Preparation of your local files, help in the preparation of your CBC report, helping in the preparation of your master file, perhaps finding ways to plan in terms of changing legislation and so forth. But not only that have we discussed how it can be used for compliance and for planning, but it can also be used for risk assessment, right? As Alex had alluded to earlier, right? For example, the tax authorities are also making use of technology, and they have specific parameters in place once they receive a lot of these compliance reports of certain things that they're going to be looking into, certain key risk indicators, 19 specifically, at least those are the ones that we know of, that they will focus on as it relates to the information that they receive within these reports. So it's important that, that taxpayers understand that technology can be useful to them in making their processes more efficient, but also making sure that they have the necessary information in hand so that way they can be able to adapt and ultimately respond to this changing TP landscape.
Yeah, and if I could just add, just imagine that as a taxpayer, having access to a software that can monitor and keep track of all 15 BEPS action items and which countries have adopted them, as well as also keep track of individual tax authorities and their legislation is constantly updating to help you monitor your requirements. On top of that, this software can also help streamline your country-by-country reporting. Also can help streamline your local file transfer pricing requirements, your benchmarking, your economic analysis, your search criteria, your functional analysis, as well as creating your master file. Obviously, the first year, when you first create your initial template, that will be the most work. But then after that, as you update year in and year out, the use and the adoption of technology that we see in the market can help streamline these processes. So I guess just in conclusion, just like Gene has mentioned, all of these activities and all these burdens that tax departments and also the company as a whole now have to deal with can be greatly assisted with the use of technology and can free up headcount and budget to allow you to use that and work with your advisors on other much more complicated and very important issues that can overall help benefit your tax department and your company as a whole.
This concludes our presentation. Should you have any questions regarding the contents of today's webinar, or if you happen to have any questions aside from what was discussed or any specific related transfer pricing issues, or just want to get more information on just technology and what particular offerings are available within the market, please feel free to contact us. Our contact information is listed above.
Yeah, thank you very much.